on Clubhouse, just putting my finger in my eye because I had a little something in my eye. That's what you do when you have something in your eye, right? You just go for it. You go, get that thing out of my eye. So talking to you live on Clubhouse right now, and we're live around the world on Twitch. It is 9 in the morning, and it is Las Vegas, Nevada. Good morning to you. Good morning to you. Good morning to you. It's a pleasure to be here with you. If you're watching this live on Twitch, I want to shout outs to you. If you're listening to us live on Clubhouse, I want to shout outs to you too. You're awesome for being here. And if you're watching on the restream on YouTube, good morning to you too. Yes, it's a pleasure having you here with us. It's been an amazing week. Of course, my name is Uch. I am a #1 best-selling author, and I'm going to show you. I like to talk to you about it. Actually, it happened Monday night as of this week. Shout out to my friend Katie. She actually sent me the screenshot for when you saw it actually happen. When you saw that #1 next to my name, I mean, just an amazing accomplishment, just an amazing feeling. When you become a #1 author, I can tell you what that feels like actually, because it happened to me, and it's just my eyes just started welling up with tears. I was like, "Is this really happening? Am I really? Are you really seeing this happen right now?" And just shocking, to say the least, and gratifying, for real, to see my name next to things like Rich Dad, Poor Dad, and pick and Think and Grow Rich. I mean, when you see those things happen, you really start pinching yourself and you're saying, "Wow, I did it. You did it. We did it. We got there. Number one on the charts." And yep, just gonna show you that right here on Zoom. So thank you so much for being with us today, and thank you so much for buying the book and for being a part of this experience. Of course, if you're live with us on Twitch, you can just throw yourself right in there. Get in the chat. Ask me whatever you want because I'm here to talk to you about just about whatever you want in the terms of finance. Yes. So stock market is crashing and why? I'm going to talk to you about that quickly here on the big old Twitch. Yes, talking with you about that. Now you might be saying, what do you mean stock market crashing? What are you talking about, Which I didn't hear the stock market is crashing. Well, opening up the markets this morning, I mean, the S&P 500 down nearly 2%. I'll share my screen with you right now and just show you exactly what's happening in the markets. By the way, if you've not taken my course, because I teach you how to read charts in my course, make sure you get yourself in my course, yourbitcoinnow.com. The prices for everything go up actually on Monday. So make sure you get yourself in there, yourbitcoinnow.com. Get yourself in my course so you can learn how to read charts the way that I do. First thing that popped up, one of my students wanted to talk about Best Buy. And when you looked at Best Buy a couple of days ago, it was around 115, I want to say. 102.73 where you're seeing it at right now. Not looking great for the big old Best Buy. I want to look at Baidu real quick just to kind of scan it. 295.67. I was selling those calls and I sold those calls when it was at about 315. I was up 250 for the day. It was going in my way, then it went against my direction to a large degree. And I said, I'm going to sell off because I see that I'm in the green here for the day. Definitely could have made a lot more money if I held on to that, but it is what it is. Baidu, kicking me in the teeth a little bit there. But it's a very red day in the markets today, as you can see. You see the, Square down about 1.5%. Facebook down 2%, 2% down for Alibaba, 2% down for Adobe and Apple. Amazon about 2%. Tesla down 6% today. Had a great day yesterday. You've seen it retrace that move today. Snap down 5% today, and they've been on fire. One of the few standouts today, Twitter up about 7% today. And yeah, you're just seeing a lot of red in the market. Spotify down 4.5%. The VIX is up 14%, which means you're seeing a lot of volatility in the market. Of course, you see the Dow is down about 300 points. So when you talk about these things, when you hear about these things, first off, there was a sell-off that was anticipated in the market by my support group, the people that I talk to on a regular basis about the markets. Like I talk with you, only they have a little bit more information about what's happening out there. He said, you're going to see a market sell-off. I said, well, what will be the catalyst? Because you always see some sort of catalyst in the market for a sell-off, meaning you see some sort of something you can print in the front pages as to why everything is going down. There's a trading group that I'm in for options. And when you read some of the comments or some of the posts in there from newbies or from people you see who don't know technical analysis, who don't know how to read a chart like you and I, And if you can't read a chart yet, I'll get you there. Yourbitcoinnow.com. You have them there saying, well, what's happened? What is happening here? Why is everything going down? I don't get it. I don't understand. Well, the market's been very overbought for the last, for a while. In the S&P 500, you've seen it been reaching overbought conditions for quite some time. It's just right there, about to hit overbought in the RSI, which is why, in my opinion, from a technical standpoint, you're seeing this retracement of this move. It makes complete sense to me from a charts perspective. It makes complete sense to you from a charts perspective, of course. However, you know that most people can't read charts. And if you're looking at a CNN or Fox Business or someone like that, they're not going to say, well, it's been overbought and that's why everybody's selling. It's not how the news, quote unquote, explains things to you and the public, or to me and the public, because that doesn't make sense to most people. Most people want some sort of reason. There's a global pandemic, interest rates have gone up, or Fed policy, or an election went weird. You're always looking for some sort of reason as to why it's happening. Shout out to Lenny. Yes, Lenny, overbought equals time to sell. Lenny, he's in the chat right now here with us on Twitch. Shout outs to you, Lenny. Lenny, are you someone who knows the markets? Are you someone who knows technical analysis, considering you knew overbought equals time to sell? Because yeah, that's exactly what's been happening. You see right here, RSI, it's not in the purple, it's nearing that, well, it's in the purple, and you see it nearing that white. And when you see it nearing that white, and when it's in the white, you know that a sell-off is coming. So back in late 2017, very overbought conditions. They call this right here the Trump rally. After the election in 2016, you saw most prognosticators say, oh, the market's going to fall, it's going to crash. But you had a lot of enthusiasm because of the Trump victory. And because of that, you saw the market go up really high, really fast, really soon. And then you saw a sell-off through 2018. So 2018 was kind of even, although it ended up for the year. Actually, did they end up for the year? 2018 was a bit of a rough year, and ultimately didn't end well. Yes, Lenny, you know TA and you know stocks. Love it. Lenny in our chat right now, aka Lendo7777, in with the technical analysis. I love it. Yes, I love it. If you want to learn technical analysis, take my course, yourbitcoinnow.com. I can get you there. If you want to know technical analysis, like Lenny, very smart man, and like me, yourbitcoinnow.com. So these overbought conditions led to sell-offs in the market, big sell-offs in the market in 2018, as you can see here on the chart. And now we're around here, and you're seeing another sell-off. So 1.5% down in the S&P 500 today. Now what you're going to see me do now is look for the mainstream reason why you're seeing this sell-off. So let's say market sell-off right here on the big old Google. Love Google. So US stocks, that's for yesterday. Let's see what they're saying today, because the market is selling off. And I want to see what the mainstream is saying about this. So here's a couple of articles from yesterday and the day before. Let's take a look at CNBC, because CNBC tends to, they toe the line. You see them toe the line between experts, so to speak, and the John Q public, who doesn't know up from down in terms of why things sell and why things rally. So 10-year yield rose to a 1-year high. Oh, so they're saying interest rates, basically. So they're saying interest rates rising is what is leading to the sell-off, which makes sense from a monetary policy perspective. When you have interest rates rise, what it does is it makes bonds more profitable. So you push people out of the stock market and into the bond market. Yes, because you've had interest rates be astronomically low for the last, what year is it today? You've had it since 2008, where, before 2008, like, you've had interest rates be astronomically low for the last really 20 years. It's just been insane. Depending on how old you are, if you're somebody who maybe grew up in the 70s or the 80s, you know of a time when interest rates were in the double digits. When you would put your money in the bank and you would get interest. Imagine that, right? And you've had for the last 20 years artificially low interest rates being kept artificially low by the Federal Reserve here in America. And when you see that happen, well, what you see happen is a frothy stock market. So you have investors, particularly institutional investors, who are looking for different ways to get a return. And when you can get a return in multiple ways, you have multiple ways to go to get your return. Now, if you only have one profitable way to get your return, then you'll go to that way. So typically you've had investors, institutional investors, pension funds, big banks, and so on and so forth. You've had them go into the bond market for their interest rates because when you get a bond and you're getting it for that return, it's something that's considered like super, super staid, super, super safe. It's not something that's going to have a lot of volatility. You're not going to see it go up and down and so on and so forth, right? So for the last 12 years or so, since about 2008, 2009, you've seen the Federal Reserve keep interest rates artificially low. And by doing that, why they've been doing that is to push investors into the stock market. Because when you have interest rates artificially low to a point where you're not really getting a great return, you're getting those institutional investors to now say, we're not going to do bonds. I think you're going to see us go into the stock market because you can get more of a return that way. So why was the Federal Reserve pushing people into the stock market rather than the bond market? Well, it's because the stock market, basically, the rug got cut from under them when you saw 2008 happen and you saw stocks, you see companies evaporate overnight, companies like Lehman Brothers and others, and you saw just destruction in the US economy. So since the stock market was just really battered and bruised, you saw the Federal Reserve said, okay, the Fed was saying, let's get you all into the stock market now so you can kind of juice up the stock market and help the US economy. Because overall, if you have these companies doing well, then you're going to have them, you're going to have a more, have more optimism in the economy. That's essentially what you saw. And that's essentially what you've been seeing for the last 12 years. So you've had people ask me, man, why are stocks just going up hand over fist over time? It's just like, well, I mean, the Fed keeps pushing everybody into the stock market. You saw that happen once again. So everything that's happened within the last 12 months, you've seen the Fed say, we're going to keep interest rates artificially low so you can have an economy that's very frothy. You can have a stock market that's doing well. You can have a lot of cheap money out there. And it looks like the party's over to some degree because you've seen interest rates go up. So just gonna share with you once again that this article, as you and I take a look, of course, you and I are live on Twitch right now, and you and I are live on Clubhouse. Shout out to you if you're watching the restream on YouTube. But yes, YouTube, we love YouTube. Shout out to you, YouTube. So the 10-year Treasury yield rises to a one-year high of 1.49 in a rapid move, unnerving investors. So 1.49 is obviously is nothing if you grew up in the 70s or the 80s or you remember those times, because interest rates were like double digits then. So 1.49 is like, what? Who cares? Well, when it was zero before, that's a huge move, right? That's a triple move up. So let's take a quick look at so this is the 10-year U.S. Treasury yield, top 149. Thursday morning, its highest level in more than a year. The yield on the benchmark 10-year Treasury note climbed to 1.49, its highest level since February 2020. It was up about 10 basis points on the session, which is interesting. The move higher in rates is unnerving you investors out there, fearing it could be driven by inflation rather than economic recovery. So you're seeing investors saying, well, this these interest rates rising up is because inflation is finally here. You've had all this cheap money out there, and you've had the devalue of the dollar to a large degree. So now what you have is interest rates rising due to inflation. That's what you have some investors saying. So 2020 closed interest rates at well under 1%. So it's moved more than half a percentage point in under 2 months, which is quite a rapid rate for the bond market relative to rates at these historically low levels. So a quote from a strategist, Albert Edwards from Société Générale. Merci beaucoup. Bonjour. To be sure, if bond yields continue to rise and there is a smooth rotation out of growth and defensive stocks into value and cyclical stocks, the Fed will remain sanguine. But the risk is growing that with so many bubbles blown by the Fed, something will burst soon. So market-based measures continue to show signs of inflation pressures. So though consumer prices were up just 1.4% from a year ago in January, recent indicators that you see of retail sales, durable goods purchases, and service sector prices have shown inflation in the pipeline. I could have told you that. I've been seeing inflation for at least for close to a year. Just go to the grocery store. Hello, like my favorite cereal went up $1, and I'm like, what? Like what's happening here? So a huge indicator for inflation that you see are asset prices going up. And you might be saying, oh, and I'm glad I finally remembered this. So this is my Bitcoin mask. See that Bitcoin mask? I love this. I got my Bitcoin mask. I wear it. This is my mask when I wear, you know how you have to wear a mask everywhere now because that's the world you live in, you and I. So this is the mask that I wear. I love it. I'll be walking down the street. People be like, what's that B on your face? Or if they're smart like you and me, what they tell you is, Bitcoin, I love your mask. And I go, yeah, I talk about Bitcoin on Twitch every Monday and Thursday. You should check it out. By the way, you can take my course too. I teach you about Bitcoin and stocks, yourbitcoinnow.com. And then I just keep walking. So yeah, there's my Bitcoin mask. I love this Bitcoin mask. I love it. I've seen you don't typically look at yourself in a mask. So being able to watch myself in this mask today with you is actually pretty cool. Yeah, loving the vibe, especially with the suit. Looks really good. I love it. So you've seen asset prices rise in terms of this big old B here, Bitcoin. Hello, the thing is $50,000 a year ago. It was a couple of grand, right? And in March of 2020, you saw it go down to 3,800. Now you're seeing it 5 grand, 50 grand, excuse me. 50 grand from 3,800 to 50 grand for you. Asset prices rising. You've also seen real estate do really well across the US sector on the whole. You've seen real estate prices rise astronomically in certain areas of the country. And obviously that is asset prices rising. You're seeing a stock market that nearly hit 4,000 points on the S&P 500. You see it at all-time highs. It has just been hitting all-time highs over and over and over and over and over. You've been seeing it do it over and over and over. Asset prices rising. You've seen also gold be very surgent, hit over $2,000 last year. It should trace the move a bit, but asset prices rising. So you're seeing what you've been seeing is a lot of inflation overall. And you've seen no one crying about it because everybody's making money and interest rates were low. Now you're seeing the chickens come home to roost a little bit, and you're seeing people crying about it because you're seeing the stock market go the other way. Yep. Very interesting what you're seeing out there. Let me just show you real quick my Bitcoin mask once again. Yeah. Look at that. The big old B in the Bitcoin. I love it. Woo. Hi. Happy Bitcoin to you. So you've been seeing some craziness in the markets as of late because you've been seeing inflation finally come to roost. Now, one thing that's interesting is that when you look at gold prices, especially today, you're seeing, and I'll just click there for you, gold prices. Let's go to gold real quick, because gold is an asset that you should be seeing rise with this crazy move down in the stock market. However, you're not seeing that. You're seeing a down day for gold today, and you're seeing it at 1780. So you might be saying, well, ooch, I don't know about your thesis or your theory here, because look at where gold is at. Well, why is that happening if Mr. Smarty Pants in a suit? Why is that happening if you're talking about asset prices rising? Gold right there, if you're seeing inflation, you should be seeing the price of gold rise and not fall. Great observation. First off, I'm going to be picking up some gold today, or some gold stocks. I've been waiting to pick up a few things because I'm seeing, look, there's a support level here around 1756 or so. I'm seeing multiple touches here. You see a touch here on the daily chart. You see a touch here in the daily chart. You see a touch here in the daily chart. Again, I teach you how to read charts in my course, yourbitcoinnow.com. So yeah, you're seeing it just at about the lows of where it's been hitting over the last few months, because this right here is back in November. So I see a support level here. Could be wrong. Over the long term, could fall down. Looking at the monthly chart real quick, here in the 12-day moving average, I'm seeing once again, boom. And we're out of overbought conditions. So you've been, from back in July, you saw the price hit 1984, 2075 in August, which I believe is the all-time high in gold. Yes, it is. Back in August of 2020, you saw gold hit 1575. And you're seeing it come down to this 12-day moving average. You see is also very overbought last summer, and it's come down into the purple. So you're not seeing those overbought conditions. So what that means to me is the big cereal conglomerate. Thank you, Lenny. Yes. Look, when you look at grocery prices rise, and it's not just cereal too, Letty. It's been a couple of other things. Like I've seen grocery prices rise. And when you see grocery prices rise, those are real prices happening. It's not like you're seeing cereal or meats or vegetables or whatever. You're not seeing the value of it necessarily go up. You're seeing the value of their dollar go down, or your euro go down, or your pound go down, or your ruble go down, or your peso go down. That is the point. And when you see the value of your currency, your fiat currency go down, what you know is inflation is at play. Hello, this is what is happening. So back to gold. You see that we're at a 12-day moving average here. We've shown some support. Obviously, you see the 50-day moving average is down here, down at 1521. If you were if you were me, you would prognosticate, because this is what I'm thinking. I'm thinking from here, you're going to have another move in gold to the upside. Again, could be completely wrong, but because you're seeing inflation hit, this is what I'm thinking is happening. Brings us back to the daily chart. Well, Ooch, if you think that inflation is hitting, why do you think that gold is down today? Well, there's something called margin calls, my friends. When you see the market tanking in any kind of way, you see some people get blown out and they have to basically get money together. They have to pool resources to cover their losses, right? So what you see happen in those cases is they take money out of certain assets in order to move them into other assets. You saw the Bitcoin price crash in March of 2020, and you saw the gold price crash around the same time. Let's go back to the monthly chart and show you March of 2020. So going back, this is, where's March? So look at March of 2020. With all that insanity happening, it's basically an even month. It opened at 1585, went down to 1451. 1575 is what it closed at. I'm going to go to the daily chart. Basically, what I'm trying to tell you is people are running out of money in the market, right? Institutional investors, whether they're hedge funds or whatnot, what you're seeing happen is they're saying, whoa, okay, market's tanking. I need money to cover some of my losses. Where can I take some money out of? I'll take some money out of Bitcoin, and I'll take some money out of gold for you to cover your losses. This is what happens, right? So let's look back in March of 2020, right quick. Let's see, boom, 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 boom. We have, okay, so here you have March 9th of 2020, you had the price of gold at 1703, March 9th. A week later, it was at 1451, March 16th. So what you had during that time, you had the global lockdowns happening. You had the US basically saying we're shutting down everything. That was the week of the lockdowns, March 16th. And at that point, you had people saying, well, I guess this is the end of the world, because you're seeing the entire world shut down overnight. What is happening here? And as a result, you saw a lot happen in the stock market, including you saw a lot of people lose their lunch. And when you see a lot of people lose their lunch, again, what you see them do is say, you know what, I'm going to cover some of my losses here. Where can I pool some resources? Gold. Let's take some of that. Bitcoin. Let me take some of that. And you have those margin calls happening. And therefore, this is where you see gold's price tank. So you're seeing a down stock market today and a down gold today, because again, if you're seeing the news story be it's about inflation, gold is an inflation hedge. You get to keep the value of your money by buying gold, because gold, right, in terms of real money, is worth well more than what it actually is today. If you bought an ounce of gold in 100 years ago, what you were able to buy for that ounce of gold then, as opposed to now, I mean, you know what I mean? Like, if you see the value of dollar, right, go down over the last 100 years, and the value of gold go up over the last 100 years, this bifurcation that you see means that, like, if you just were like Rip Van Winkle and you had an ounce of gold then and you slept for 100 years and woke up today, you would be king of the hill in terms of what you could buy back then and what you can buy now. So with that said, you should see gold go up from here if you're seeing inflation continue to remain the story. And it looks like that is the story. Now, will the Fed do? Will the Fed step in and say, hang on a second here, hold your horses, we're cutting rates? You might see that happen. And if you see that happen, you might see things change a bit in the stock market. However, if you look at the overall market and what you've been seeing, a sell-off has been imminent. A sell-off, excuse me, has been imminent because you've seen things move towards overbought. Even if you look at the chart here, and Lenny knows this because Lenny's a smart guy who knows the market. Shout out to you, Lenny, for getting in the chat this morning. Yeah, shout out to you watching again on YouTube. Love ya. You're seeing that there's a resistance right here. Resistance at 39.89. We never quite got up there. Well, we were close. You saw the S&P hit 39.50. I know that in pre-market action or in after hours action, you saw it hit 39.60 something. But in terms of during the market, you've seen it hit 39.50, and now you've seen a retracement. In fact, what was that 2 days ago? You saw the saw it hit the 50-day moving average, which is interesting. You see that there's just been exponential growth, on the daily chart. Things have just been pretty strong, pretty bullish. Taking a look at the monthly chart with you, again, things have been pretty bullish. But you're also seeing the S&P quite above the 50-day moving average. I think actually, with everything you're seeing, this is a pretty good time to sell calls on SPY. SPY being the ETF that monitors the S&P 500. This is what you're looking at SPY right now. This is why you basically see it look identical to the S&P 500. I'm going to look to do some shorts on SPY today. That's what I'm going to look for in the options market, because it doesn't look like we're going to be going to 4,000 anytime soon. I have a 400 strike call on SPY. So you see SPY at 385 at the time of recording this for you, which means we're 15 points away from 400. And you might be saying, "Ooh, it's only 15 points." You know that we can get there by March 19th, which is when that option expires. Of course, you can, or you can go the other way, which is down, which it looks like is what's going to happen. You see that there is, ooh, look at that. I love it. This is why, you know what? This is why I love Fibonacci. I'm just going to just right here. I mean, this is just gorgeous right here. What you're looking at right here is gorgeous. And if you don't understand a word of what I'm saying or understand anything I'm looking at, yourbitcoinnow.com. Take a look at course, and I will teach you how to do this. And you know what? You'll do well. So 38.49, you see that right there? This right here is a Fibonacci extension that I drew on this chart. This right here is a Fibonacci sequence, and here's another Fibonacci sequence that I drew for you so you would know where the price is going. So you've seen where the price has been, but you want to know where the price is going. So I drew this Fibonacci extension once we passed 33.90, which once upon a time you saw the all-time high in the S&P 500. So 38.49 is where you have another resistance. 36.73, you saw us blow it right through that. 38.49 is our next resistance, and lo and behold, you see this candle fighting to get through that 38.49. You saw it break through it to a large degree, and I did call out 39.90 as a key level. But boom, 38.49 you have right there as another key level in the S&P 500 for a level that you might see be a resistance. Right now, you're seeing that as a resistance, even though you're seeing the price at 38.62. Currently, telling you right there at 38.49. That might be a great short in SPY. 38.49 plus you're in the money there as well. So you might be looking at a level there that is quite lucrative, meaning it's an expensive option right now because you're in the money right now. Of course, you run the risk of being called on that option and losing on that in terms of selling for premium. When it comes to options, I prefer selling for premium rather than buying options. I did buy that 400 strike call that I told you about. You may be asking, well, why did you buy that strike call at 400 if you prefer selling? Well, I bought that back in May of 2020 because when you saw the stock market go astronomically high, didn't make any sense to you if you were me, right? Because I'm thinking, this doesn't make any sense. The whole world is shut down, and you have all these companies now, going back to the levels that they were at before March of 2020. It's 2 months later. This makes no sense. So you have people asking you left and right, Ooch, what should I buy? I'm seeing the stock market's going crazy, man. I got money to burn. And I would say to them, you know what? I can't in good faith tell you to buy anything. If you're going to buy anything, buy a call option on SPY. Buy a call option on SPY. What do you mean by that? I'm saying buy the call option on SPY because that's what I'm going to do. Because that right there is almost like a lottery ticket where if you see things just go to nothing, I won't feel bad. And if you see things go to something, I'll feel good because at least I had some exposure to seeing this market go up. For me, at the time, I couldn't find any fundamental reason in good faith to buy any stocks in May. Now you may be saying, oh man, you missed a boat. Well, I did own gold stocks at the time because you did see golds and the price of gold stay not only at a good level, you saw it moving up, and it also fundamentally made sense. You had $2 trillion printed by the Federal Reserve overnight, devaluing our currency overnight. So the goose was cooked there. You were going to see assets rise. You're going to see inflation of some sort just by that happening. So inflation hedge being gold. What do? You buy gold, which is what I did. You buy gold miners because when you see gold move 1%, you see gold miners move 3, 4, 5% in a day. So that's what you did if you were me. And you also bought this SPY call because you're like, okay, this SPY call is 39 cents right now. It is a 400 strike call on SPY for March 19th, 2021 expiration. So if you see things go astronomically high, I'm going to make a lot of money. If you see things go nowhere, well, I won't feel bad, right? Because at least I had some sort of exposure to this market. And I'm not expecting things to go astronomically high, which is why I'm buying such a cheap option to begin with, so far out of the money. Because at the time you saw SPY was at like 300. I bought a 400 strike call because I'm like, doesn't make sense, people. And you're not going to see it happen. And guess what? You nearly saw us go to 4,000 just this month. So that SPY call was super expensive. I was going to say hella expensive because I've been living out here on the West Coast. So it's interesting how the West Coast rubs off on you. Did I show you my Bitcoin mask? Woo! Love this Bitcoin. I'm loving the Bitcoin mask with the suit. I feel like a G. I feel very studious. Love it. Speaking of studious, my book is out. I want to show you my book real quick if you haven't seen. My book is out. It's a #1 bestseller. So a #1 best-selling author you're looking at right here. This guy with this B on his face. This guy with this Bitcoin mask. As you see, 3853 in the S&P 500 right now. Pick up my book, 10 Ways for You to Win the Stock Market. I was inspired by you, my students. I was inspired by you, the beginner. I was inspired by you who wants to better themselves. So you get yourself in there. YourBitcoinNow.com is my course. And of course, I have you my new book, 10 Ways for You to Win the Stock Market. I made it for you. I did it for you. I did it for you. 10 Ways for You to Win the Stock Market. It is up right now. And by the way, you're going to see the audiobook very soon. And you're also going to see the price of this go up. So it's not staying $2.99. So make sure you act now. Get yourself in. 10 Ways for You to Win the Stock Market. Out now on Amazon. It is a #1 bestseller. And you're looking at a #1 bestselling author as of Monday night. I feel amazing saying that. It's like, so stock market crashing. Why? I'm really loving the title of this show today because I'm telling you why. I'm telling you it's because of those interest rates that they were talking about on look at that 38.49. You're seeing it at 38.52. 38.49 is that resistance. Now you have a better play here, right? You have a better play in the sense that you can sell the 38.50 calls, which again is in the money, right? And you have more wiggle room because at 38.49 it should stay below. So you could get punched in the face tomorrow, and after this red day, you can see a green day, right? Because you're seeing the daily chart here. Let's look at the daily chart right here. So we're not oversold. Let's look at it in Heikin Ashi. I show you Heikin Ashi candles and how they work in my course, by the way, yourbitcoinnow.com. So you're seeing on the Heikin Ashi, it's kind of at an impasse here. The bulls and the bears are at an equidistance level. You're seeing a big red candle here going to the 26-day moving average. And I mean, you had a green day yesterday. who's to say you can't have another red day tomorrow and test that 50-day, right? Especially if you're seeing the story B. What are you seeing the story B today? You're seeing the story B interest rates. So why not sell off into Friday? You might also see investors buy the dip. I want to buy the dip here for sure, even though I think you could see us go further down. I mean, that monthly on the monthly chart, once again, you see we're well above the 12-day. Look at the 12-day where it's at 34.47. We're at 38.54. Very frothy market. Interest rates starting to come down. A new president and Joe Biden. You can now have people blame the president for why the stock market's going down. Oh, when you had Trump as president, the stock market kept going up. Now you have a new president and it's all going down. You know, people think like this, right? And it's easy to have, a Democrat in office, not to get political, but it's easy to have a Democrat in office and say, well, everything's going down now, right? Because you had, let's see, the last 20 years, let's take a look. You had George W. Bush. He came in 9/11. So that brought us down a precipitous low. And that was also the tech bubble bursting. You saw us come up from there exponentially from 02 through 2008. And then on his way out, market crashes, you had Obama in there, and you had the stock market come back up, but you also had it, you had real estate depressed, and you had a stock market which was at its lows. And you had a lot of people who weren't doing well, by the way. So that precipitated for 8 years. You had the stock market doing well, going at all-time highs, and you had the C-suite and certain investors doing really well while Main Street was suffering and not doing well. You had the United States say, we want something different. You're telling us that everything is great, Mr. Democrats, but you're not getting down to us. You're not getting down to our level and helping us. We're struggling here. We're going to go with Republicans now. So Trump come into office, and you had 4 years of the stock market doing really well. Now, you had the stock market doing really well for a lot of different reasons. You had interest rates staying astronomically low. You had a huge runway, built before it with the 8 years of recovery, quote unquote, so to speak, that finally got to Main Street, right, during the Trump presidency, or at least to some degree, right? You saw the record low unemployment. And again, I'm not playing politics here, folks. I'm not rooting for either team. I'm just showing you exactly the math of what you've been seeing. 2020 happens, you see the market crash, and then you see the market come back within 3 months of each other, which is very interesting. And you see the market go to all-time highs or close to it with the last president leaving and a new administration coming in. So what you've been seeing a lot of, and let's go back even further, back to the 90s when Bill Clinton came in. You had the first George Bush, have a recession. He also raised taxes, read my lips, no new taxes. He went against that and raised taxes. You had the recession happen then. You had people angry and said Republicans said that you had a handle on this. We remember Reagan and things were great. This guy, Bush, not so much. We're going to go with Clinton, brought him in, and you had a recession that he inherited, and you had an ascendant economy over the 90s. It was the tech bubble boom, and so on and so forth. So you often see administrations change because of the economic conditions. And when you also see administrations change, you also see economic conditions shift for the better or for the worse. You see things shift when a new president comes in. It's not necessarily the president's fault or doing either way. It's just timing. You have a certain timing in the mood of the country in America, and then you have that timing just replicate itself in the markets, and in the U.S. economy. So that is what you're seeing. Once again, it looks like you're seeing a frothy market, which was like, hey, let the good times roll. I mean, look, you can go all the way back to Herbert Hoover. I mean, what a raw deal he got, right? He came in after the roaring 20s. This is, Herbert Hoover is the guy who became president. I believe he became president in 1928. So let's look at Herbert Hoover real quick. I'm not going to bring it up for you on the big old chart or right here on your screen. But Herbert Hoover, yes, let's see, boom, boom, boom. He became president in 1929, which of course is the year the U.S. economy tanked and you had the Great Depression. I mean, was that his fault? Like, he just showed up. He's like, hey guys, ready to take over this. Wait, hang on. What? Wait, huh? What? wait, crash, wait, hold, wait, I just got here, guys. What are you doing? What are you doing to me? Like, I just, oh, what? Huh? So let's see. The 31st president of the United States, yes, Herbert Hoover, became president on March 4th of 1929, and he only lasted 4 years. Franklin Roosevelt came in after him, and yeah, it's like, dude, everything was great till you got here. He was preceded by Calvin Coolidge, so I guess he has Calvin Coolidge to blame for the U.S. economy tanking. In terms of what politician was in here that caused this, who can we blame? So he inherited a great economy and it went to crap because it was ready to go to crap. And Trump inherited a long runway of economic growth, even though it was anemic economic growth overall, especially for Main Street. It was growing, it was ascending, and it just wasn't doing well enough for the country in America to say, you know what, yeah, we like where things are going. They were like, this isn't enough, we're not getting it yet. 4 years of Trump, it finally comes to Main Street, and call it what you want in terms of why he lost the election. I personally believe it's because too much tweeting, just too much tweeting. Just, dude, shut up. Just shut up. And there's Republican friends of mine who agree. They say, yeah, too much tweeting. And they love him. Loved him. Loved what he did. Stood for what he stood for. They're like, too much tweeting. So Americans don't like anyone who, is kind of brash and rude. So they wanted something a bit more boring. They went with Joe Biden. And now you're seeing market tanking. And you're going to see people blame the president because this is what happens. You see administrations change and so on and so forth. People get the blame. Going back to your charts real quick, I want to show you once again exactly what is happening. I got Calvin Coolidge on there. Mr. Cool is Coolidge. He presided over the 1920s in America to a large degree. His predecessor, this guy, Herbert, the guy who came after him, Herbert Hoover, Mr. Hoover, he inherited such a great economy that was basically a house of cards and precipitated the Great Depression. He also didn't do much during the 4 years to make the Great Depression subside. And you saw people really get hurt. And as a result, you now have active Federal Reserves that make sure that they don't allow another Great Depression to happen, which is why you're seeing artificially low interest rates and just a lot of craziness in the market. 38.55 you're seeing in the S&P 500. Let's look at some of the overall stock markets once again. Here are some stocks that my students like to look at. CRM, Salesforce, I was talking with you about that recently. I'm loving that. I haven't picked up any yet. Ooh, that looks good. The market is on sale. I love when the market goes on sale. FSLR down 5%. Blink, what's Blink? I don't remember what Blink is. Blink Charging. I think they're an EV company, perhaps. Down 8% today. EXPI called out for you recently. It's down to $60. Look at that. Look at that. It was at 180 once upon a time. So you're seeing it at 60. So it says right here, up here, O, H, L, and C, what you see up here on the chart. That O stands for open, the H stands for high, L for low, and C for close. I teach you this in my course, yourbitcoinnow.com. So as I hover along this candle on the monthly chart on EXPI, you see it says 90. So it went from 90 to 60, folks. Now, there was a stock split. So you saw the stock split 2-1. So that's why you're seeing it at 60 now. And that's why you're seeing it say 90 up there, because it was 180 and then the stock split happened. I don't remember exactly what date that was, but it was within the last few weeks. You saw the stock price split. So basically, if you had an $180 stock in EXPI, you saw that one stock get split into two. So instead of one, you now have two, and each stock was worth 90. So 90 and 90 equals 180. So instead of having the one stock for 180, a stock split means you split it right down the middle. The amount of stocks you have, if you have 10 stocks, now you have 20 stocks, or so you're basically doubling your stocks, but you're splitting the value of them in half. Got it? Hope you get that. GameStop today up. What is happening here? Guess who's back? Back again. GameStop's back. Tell a friend. GameStop up today, 60%, up to 145. Oh, they've come back to play, haven't they? They have come back out to play. It hit a high of 170 today, GameStop. Oh, man. Oh, to see this is so funny. Let's look at the hourly chart real quick. You know, I didn't even know that this was happening, but I'm glad that I did. I'm glad I'm seeing this with you also. So on the hourly chart, clearly overbought here, and none of this makes sense. Didn't make sense before. You're not seeing it make sense now. I'm gonna guess that Wall Street Bets is at it again. I got about 15 minutes with you left, or a little. You know, I have a client on the hour, so I'm gonna finish with you maybe 2 minutes to the hour. So we got about 13 minutes left here. Good morning to you if you're watching us on YouTube. Once again, you know we do the restream on YouTube, so shout outs to you if you're watching us on Twitch. Shout outs to you too. Get yourself in the chat. I saw Lenny in the chat. Hey Lenny, do you want some Bitcoin? I'll send you some Bitcoin because you are a subscriber here, I believe. Yes, you are a subscriber. You are a subscriber, and if you are a subscriber and you're here on the show with us, I give you Bitcoin. So just let me know that you want some Bitcoin. Whisper me your wallet, like a address, wallet address, and I'll send you Bitcoin, pal. That's about that. Okay, so let's look at GameStop. GameStop. The GameStop bulls had it again. GameStop up. So if you GameStop shares surge, halted multiple times as Reddit favorites rally again. Oh man, can't believe they did this again. And of course, they chose when the market is tanking. Some people trying to sell their bags. So there's people today who will be like, "Ooh, she said that GameStop was a waste of time. Look at where it's at." GameStop shares surge, halted multiple times. Okay, so investors piled into the video game retailer on Wednesday. So this started yesterday. So shares jumped up again on Thursday. Stock last traded up 66% for the day. Company announced Tuesday. Let's see. I mean, the CFO stepping down. It says, yeah, just really crazy. You know, really, really crazy what's happening. Let's see what it did yesterday. Looks like yesterday was a big day for GameStop as well. It was at like $40. Yesterday it opened at 44 and closed at 91. So it broke the 50-day moving average, and now it looks like it's looking to break the internet. It's at 151. And again, you know, wouldn't touch this with a 10-foot pole. Might be saying, well, Ooch, you're missing out. You're missing out, dude. Dude, missing out. Thank you for that, dude. Appreciate that. I like to stick with fundamentals. I like to do what makes sense. So this doesn't make sense to me. It's just hype. It's a bubble. And, you know, the bubble will burst in some way, shape, or form, and people are going to get hurt. And, you know, I don't want to touch it. So that's that. Scrolling through the market some more. I mean, it is tempting, especially, you know, I did try to short it once upon a time, tried to sell the call options on it. And you had TD Ameritrade tell you, no soup for you. We're not going to allow you to do that, which is completely fair. Moderna up today, 3%. ENZC, I'm not exactly sure what that is. It's up today. Airbnb down about 10% today. Looks like Airbnb's been doing really well. Has an all-time high of 219. I remember when it was 130. So you see Airbnb doing really well. XBI down 3% today. XBI, a biotech ETF I used to trade quite heavily. The VIX definitely a spike today. Palantir down 9% today. Nikola down another 6% today. So yeah, you see a lot of blood in the streets. Therefore, what you're seeing also is a lot of buying opportunities. Now, you don't know how far things are going to go down from here. However, if you're bullish long term on your stock, then you should just pick it up, pick it up, pick it up, pick it up, pick it up. Because why not? Pick it up because why not, man? Why not? You can pick it up, have a look, and then as it goes up, buy more. Because you're bullish long term. If you're seeing the prices down today, that don't mean anything. Doesn't mean anything. You're going to see the price of it go up over time. Which brings me to some of these gold stocks. Harmony Gold has definitely been a toughie for me. On the daily chart, it's below the 50-day moving average. Let's look at the monthly chart right quick. It's come down to the 12-day right here. Ooh, look at that. That's so nice. The 50 days down at 330 something. And I know that we're well out of overbought conditions. So here is a gold stock that I'm in on. It's actually something I'm down on too. I think my cost basis is around $5 or so, 520. So I'm well below my cost basis. So the question is, do you pick up more? Because I'm telling you, or I'm saying to you, man, you see it's down, you should pick up more, especially if you're bullish long term. Well, maybe you do pick up more if you're me. I think so. JNUG down 9% today. Peloton down 7%. You're seeing a lot of blood in the streets today. So market's down, and of course, I've been talking to you about why that is, or why you're seeing that being said. Well, you're seeing that being said, and you're seeing that manifest because you're seeing artificially low interest rates, and when you see artificially low interest rates rise, right? So you're not seeing artificially low interest rates; you're seeing interest rates rise, and you've been seeing artificially low interest rates now finally rise, and you're seeing speculation that it is due to inflation. So all the cheap money you've been seeing sloshing around the party essentially is over, and the Fed now has questions for themselves. Do you lift interest rates now if you're the Federal Reserve? Do you lift interest rates now in order to protect the U.S. economy and protect the stock? Well, protect the U.S. economy, protect the stock market. You don't have the stock market doing well. You have consumer confidence start to creep down because it just scares people. You see people look at their 401ks. They're like, hello, what's happening here? I thought I had some money and now you're telling me I don't? I guess stocks aren't doing too well. You see that happen. And what you want to do is have people feel like things are going well. So when you don't have people feeling that way, you have people feeling like, oh man, this is not good. You start to see a little bit of panic. Looking at Snowflake. Snowflake is a stock that was called out recently. I think it was Josh Brown on the compound and whatnot. 429 back in December it hit, and now it's a 257. So I mean, obviously, just very. I mean, you don't see overbought conditions yet because the stock is only a couple months old, so you don't even see any EMAs. You see nothing on it so far. That's all good. PayPal at 5%. Let's see. NVIDIA down 7% today. Riot Blockchain down 9%. GBTC down 2.5%. It's funny to see those because I don't think Bitcoin is down. Let's take a look at the big old B. Bitcoin is down slightly today, But you may be saying, well, why are those down then? Why do you see these shouldn't even be in here? Best Buy. Oof. Best Buy. That looks terrible. Down 10% today. SNE, Sony down 2% today. You might be saying to yourself, well, why? Why is everything down? Why is Riot Blockchain down? You might be saying, why is Riot Blockchain down? Why is GBTC down then, Ooch, if you see Bitcoin essentially even? Well, once again, you have a thing called margin calls, my friends, where people are like, okay, I have some money over here in Bitcoin. You see some money's out here in gold too, but I got to pay my bills. Like, market's down overall. I'm talking about institutional investors. You see hedge funds and whatnot who have money kind of in different areas. You see them pull resources, you see them pull money from other places so they can make sure that they're well funded overall and they're able to do everything they need to do. So you see things like Riot down today because people are like, I'll pull some money out of Riot today. And now they're down to the tune of 10% as a result. see people take some money out of Grayscale, which is GBTC, and you see they're down 3% as a result, even though you're seeing Bitcoin and the price of Bitcoin essentially be even for the day. Same reason why you're seeing gold sell off, because people are like, I got money to pay around because my stocks are down. Something you see in the markets. It happens. It happens. So, yep, that's basically what is happening right now. 3841, you're now seeing the S&P 500. Oofa, oofa. So it's down well below the 3849. If you decided to sell those SPY calls, yeah, you're doing pretty good so far. You're doing pretty grand so far. If you're selling those 38 5 calls, you're doing pretty grand so far. Yeah, you're doing pretty good because look at where the price is at. Tempting, tempting, especially because that 50-day moving average. I think you might see us test that 50-day tomorrow. You also could see us stay above the 12-day or the 26-day today. The 26 days of 3863, and you could see things go bullish from there. Let's see today. Let's see, the week started here, and I think you're just going to see a down week, or you could see an even week where we end up. Who knows? I would look to go bearish here before I go bullish. I'll say that. But that said, for you, I am looking to buy this dip. Yep. And if you see stocks continue to fall because of what's happening with interest rates and so on and so forth, then you're going to see me continue to just buy the dip because I'm bullish long term on the markets. With all the money printing that you have been seeing, I think you will see the stock market ascend because the real value of everything has been tweaked that you've seen, and you've seen it be tweaked because of all the money printing. So you're seeing grocery store, food prices rise. Seeing a lot of things happen because you're seeing a lot of things rise because the value of the dollar, value of the euro, all of that has been going down. So yes, that's essentially what you've been seeing. And it's been a pleasure being here with you today. I want to thank you so much for being here with us. Hope you had your morning coffee this morning. I've got clients all morning, which I'm super excited about. I'm showing you my book right now, and I'm showing you my Bitcoin mask. Make sure you pick it up. 10 ways for you to win the stock market. It is a #1 bestseller on Amazon. I'm so proud to share it with you. Yay! So you can learn. The more you learn, the more you earn. The more you learn, the more you earn. And yeah, don't be too scared about what you're seeing out in the market right now. It is what it is. And, I'm buying this dip. You could see things go precipitously lower from here. That's okay. That's okay with me. I'm gonna continue to ride this wave because I think the markets are gonna stay pretty strong. And if you might be wondering to yourself, well, how do you know that? It's because I know the markets, folks. And you can know the markets too. You can take my course, yourbitcoinnow.com, or you can pick up my book, 10 Ways for You to Win the Stock Market. Yes, indeed. Yes, indeed. It's been a pleasure being here with you. Thank you so much. Shout out to you watching us live on Twitch. Thank you for being here with us on Clubhouse. You know, we're live on Clubhouse and live on Twitch every Monday and Thursday morning, and also restreaming on YouTube. You have an amazing weekend. God bless. Take care. I'll see you soon.